Welcome to the weekly financial analysis. Global financial markets concluded the trading week with strong upward momentum across key asset classes. In Washington, Federal Reserve leadership signaled the potential initiation of monetary policy easing at the upcoming September FOMC meeting.
United States consumer inflation cooled to 2.9%, marking the lowest reading in over 3 years and supporting soft landing expectations.
Benchmark 10-year Treasury yields retreated below 4%, alleviating equity valuation pressures and driving capital toward risk assets. According to global investment bank strategists, the imminent global rate-cutting cycle will act as a structural catalyst for equity repricing. Institutional capital is rotating out of defensive cash equivalents and actively re-entering high-growth emerging equity markets. Rising geopolitical tensions in the Middle East threaten key maritime corridors transporting 20% of global crude oil shipments. Heightened risk aversion combined with falling real yields has propelled spot gold prices to unprecedented all-time record highs. Across the Asia-Pacific region, equity bourses advanced broadly, driven by robust rebounds in technology, semiconductors, and industrial manufacturers. In Tokyo, central bank officials reaffirmed a measured, cautious approach to rate adjustments, successfully calming global financial market anxieties.
Global markets have now fully absorbed and neutralized the acute volatility triggered by the earlier unwinding of yen carry trade positions. As the Japanese yen stabilized near 146 per dollar, the Nikkei 225 surged over 500 points.
Semiconductor equipment powerhouses led the rally, boosted by surging global enterprise demand for artificial intelligence hardware and advanced chips.
In China, the Shanghai Composite consolidated firmly at 3,905 points, supported by substantial central liquidity injections. The People's Bank of China injected over 1 trillion yuan through open market operations to ensure robust banking system credit expansion.
Global institutional research notes that ongoing property sector refinancing measures are establishing a sustainable valuation floor for Chinese real estate.
In South Korea, the KOSPI index extended its winning streak for a third consecutive week amid strong offshore institutional buying.
Foreign portfolio inflows concentrated heavily into electric vehicle battery champions, reflecting strong long-term structural demand for clean technology.
In Vietnam, the benchmark VN index rallied nearly 34 points on Friday, closing at 1,768 points. Trading liquidity on the Ho Chi Minh City Stock Exchange surpassed 22,500 billion dong, surging 25%.
The broader market price-to-earnings ratio stands at 13.9 times, presenting an attractive structural accumulation window for long-term investors. Regulatory authorities finalized non-pre-funding mechanisms for foreign investors, clearing the final obstacle for FTSE Russell emerging market classification.
Foreign institutional investors shifted to decisive net buying, injecting over 1,000 billion dong into high-conviction blue-chip equities. Inflows concentrated into leading commercial lenders, lifting the banking sector by over 2% on expanding credit growth prospects. Steel and energy majors advanced over 3%, underpinned by robust domestic consumption and firm global crude oil benchmarks. Technology leaders continued attracting long-term foreign capital on the back of accelerating global digital transformation and enterprise AI contracts. Friday's technical candlestick reversal firmly validated a solid short-term support foundation at the 1,740-point level. Expanding market breadth and volume momentum now position the benchmark index to challenge the psychological 1,800-point resistance.
On Wall Street, the Dow Jones Industrial Average staged an impressive recovery, surging over 517 points to 53,000. The S&P 500 gained to 7,641, while the Nasdaq Composite held firm above 26,000.
The technology-heavy Nasdaq stabilized as profit-taking in mega-cap semiconductor shares subsided amid broader market rotation.
According to international news agency data, over 80% of S&P 500 companies exceeded second-quarter earnings estimates.
Across Europe, the benchmark Stoxx 600 advanced 0.59%, closing the week at 654 points.
Growing market expectations of an autumn rate reduction by the European Central Bank boosted aerospace, travel, and consumer retail sectors.
Germany's DAX 40 index gained on solid export order bookings for industrial machinery from expanding Asian and Middle Eastern markets. In London, the FTSE 100 advanced steadily, buoyed by robust quarterly earnings from multinational energy and mining commodity producers. In global commodities, spot gold prices skyrocketed past the historic $4,600 mark, reaching all-time record highs. World Gold Council data confirmed central banks across Asia accumulated over 120 tons of gold for strategic reserve diversification. In the domestic market, premium gold bullion surged to record levels of 147.6 million dong per tael. 99 gold rings traded near record highs, while global silver stabilized at $39.45 per ounce. In energy markets, Brent crude rallied to $94.23, with WTI surpassing $86 per barrel. The Energy Information Administration reported United States commercial crude stockpiles dropped 3.2 million barrels on strong refinery runs. The OPEC Plus alliance reaffirmed its voluntary production cuts of 2.2 million barrels daily through the end of 2026. United States natural gas eased to $2.77 per million BTU amid ample liquefied natural gas inventories. In agricultural commodities, New York Arabica coffee futures touched 6.5-month highs of 329 cents per pound. Brazilian coffee exporter reports confirmed severe La Niña drought conditions reduced monthly Arabica shipments by nearly 9%. London Robusta coffee futures consolidated at $4,520 per ton, following technical profit-taking. Domestic black pepper prices remained well supported at 142,000 dong per kilogram on balanced physical supply and demand. Vietnamese 5% broken rice export prices remained firm, supported by steady government procurement tenders across Southeast Asia. Hot-rolled coil steel and iron ore prices consolidated as traders awaited fresh infrastructure fiscal stimulus deployments across East Asia. In currency markets, the United States dollar index DXY closed the week steady around 102.82 points.
The State Bank of Vietnam maintained the central reference rate at 24,280 dong, amid healthy foreign exchange liquidity.
Leading institutional research strategists emphasize that Friday's decisive technical breakout establishes the foundation for a renewed cyclical uptrend. Portfolio managers recommend maintaining an equity allocation of 70 to 80%, utilizing minor intraday pullbacks to accumulate high-conviction holdings. Commercial banking represents the primary overweight recommendation, driven by accelerating credit growth and well-managed credit asset quality. Industrial real estate developers stand to capture sustained long-term tailwinds from high-value multinational manufacturing and semiconductor supply chain migrations. Infrastructure, steel, and energy providers continue benefiting from accelerated public capital disbursements and expanding national utility projects. Investors are advised to maintain strict portfolio discipline, systematically locking in partial profits as equities approach major multi-year resistance levels. Global market attention next week turns directly to Central Bank Economic Symposium keynotes for definitive signals on international monetary policy trajectories. That concludes our comprehensive global market analysis. Join us tomorrow for the weekly Strategic Asset Allocation Outlook. Thank you and goodbye.